What's up, guys? Welcome to this episode of the Unemployable Friday sessions. This one was lots of fun. Please watch it all the way to the end because it got hysterical towards the end. We were in stitches. I talk about my experience at Bitcoin Prague, some of the extraordinary stuff that I saw there, and we go deep on Bitcoin treasuries. What is a Bitcoin treasury company? This is a fun fact you may not know, but the number one performing stock in the US stock market, the number one performing stock in the Japanese stock market, the number one performing stock in the European stock market are all Bitcoin treasury companies making thousands of % return per year. It's insane. So we went deep on what the hell is a Bitcoin treasury company, and it was a really fascinating discussion. We talked about property and how money is moving at record paces between asset classes right now and how you can benefit from it. And a whole bunch more. You're going to absolutely love this one. I also made an announcement in this one about something big that happened in my life recently that I'm sharing here for the first time on the pod that I think you'll find interesting, and my reasons for pulling the trigger on that particular transaction. So with that said, let's get into it. Remember, guys, like and subscribe. And if you haven't already got your ticket to our Freedom Summit coming up, go to unemployable.com.au/freedom. And it's going to be an amazing event. We've raised almost $100,000 for charity. All proceeds go for charity for this one, 3-night event. And you can come and join us from anywhere in the world. With that said, let's get on with it. So, guys, I don't know if you've been noticing what's been happening in the world, but it's not what you think. Let me tell you something. I looked at the price of sandwiches in the Istanbul airport, and I don't know if you saw it on my Instagram, but a wrapped chicken sandwich in plastic is 15.5 euros, like $25.
Wow.
It's out of control. I don't know if the Istanbul airport, by the way, is nuts. It's probably one of the most impressive airports I've ever seen in my life. But Jesus Christ, it's out of control. But with that said, welcome to the pod, boys. How are you all? Mark, how are you?
Doing good. Big week. Yeah. It's been a big week. Looking forward to this one. I can't believe it's been a week already since the last pod. It feels like yesterday we jumped on the. It's been one of those weeks where it's just gone so quick. I don't know if it feels the same for you guys, but it feels like we were speaking yesterday.
I bumped into a mate literally an hour ago. Just got back from 5 weeks in Europe, and I said, another mate's been over there, and he talked about the price of granola and sandwiches in the airport. And he said, well, I was in Ibiza 2 nights ago at a relatively normal cafe, just had 2 entrees of main and a bottle of wine and a cocktail each, and it was 600 Aussie dollars. And he said it wasn't that crash hot. I said, how does the average Australian go just with his missus, or if he's got 2 kids for a European holiday, unless they're just going to eat fucking rice and beer, a beer and rice diet like a uni student? That's just nuts.
That's
like,
out of control.
That's like when I went to Saint-Tropez back 10 years ago, and a shot at the bar was like 32 euro, just a shot at the bar. But it's like the average Australian's not going to Ibiza or Saint-Tropez anymore, right? Like they're just those places are just beyond affordability.
Totally out of control. Eric, how are you, mate? You good?
Yeah, very good. I recorded 2 podcasts earlier today here at the studio with the boys from with Shannon and Carson from Unemployable Property. A couple really good podcasts, and I had my eldest daughter here live because it's their school holiday, so she was here live watching the podcasts, asking questions, and she was on a Zoom call with me with some input on a few things. So it's cool for her to be here and kind of witness, what we do. And I did a post, and I posted it with her coming here, and I said, well, someone's got to know where the snacks come from.
just for the audience, mate, you're back on solids now after 3 days of wearing nappies. Is that right?
I was on a 3-day water fast. I ended it yesterday at 6:00, and Jen made this beautiful pumpkin soup with greens, and I was eating it, and I was like I was eating a Big Mac. That's how good it tastes. It was just like the first solids I've had. And but you know what? I did it. It's a good mindset. It's a good reset for the body, resets the cells, but the resets up here too, that you can actually do these things, But I got the support of Jen, and she likes to do that type of thing. So, and I can't look like a wuss, so I jump on the bandwagon and say I can do it too.
That's how you got through. Jen did it too.
100%.
All right, guys, top of the ticket. I have just come out of Bitcoin Prague, as you know. So let's kick off today with a little bit of Bitcoin banter because it was For those who don't know, it's the biggest Bitcoin conference in Europe. It's the equivalent of the one they do in the US. It's put on by Bitcoin Magazine, and it was a phenomenal event. And what made it so great for me was that it was Bitcoin only. So there's no shit coins, there's no altcoins. It's just all pure Bitcoin. And the Europeans just do it so well, just like in terms of really honoring the culture of Bitcoin. They had, like food trucks outside, and they had thousands of people from all over the world. The highlight, of course, was I got to meet Michael Saylor, got a selfie with him. But I also met a whole bunch of other interesting people there. Lawrence Lepard, who was on the pod, Prince Philip, who was on the pod, and just a whole bunch of really high profile people. But the vibe in the room was just extraordinary. The vibe in the conference halls was amazing, and so much going on. And I think a few big takeaways was for me was listening to the Treasury companies, and I want to jump in and talk about that with you guys today. One of the speakers that spoke was an investment banker from Paris, and he basically said, look, internally at our shop, we assess every opportunity that comes through the door against Bitcoin being the hurdle rate. And he said, why would we do anything but buy Bitcoin, which is at a 40%, 50% CAGR? Everything we look at has to clear that hurdle before they even get a meeting with us for any deployment of funds. And then, we heard from the founder of Blockchain, the CEO, who's a young guy from a company called Blockchain Group, which is the MicroStrategy of Europe. And these guys are up 3,300% year to date. So we're at the end of June, right? We also had a company called Tobam, which is Tobam for Mary. I had a chance to speak to the chairman and the founder, also Paris-based, with his offices on the Champs-Élysées. These guys have a private fund that invests in Bitcoin Treasury companies. So like an ETF, but they only invest in Bitcoin Treasury companies. And they've had thousands of % return since they started the fund. And it's a minimum 100,000 euros in private fund. But what they did is they basically got a team of mathematicians to break down the math and science behind MicroStrategy's success. So for those of you who don't know who MicroStrategy is, they're now called Strategy. They're the most successful company on the US stock exchange. They've beaten everybody. They've beaten all the Mag 7. They've beaten NVIDIA, everybody in recent years. So these guys did a mathematical white paper, which they released to everybody at the event. And it was just eye-opening, sitting in the crowd. And before we open this up, what was really fascinating is Michael Saylor spoke on Sunday at 3 o'clock, I think it was, or 2 o'clock. Everybody, the room was packed to the rafters, people sitting on the floors around. Then after Michael spoke was the CEO and founder of the Blockchain Group. And a lot of people just left the room when Michael finished speaking. But the guy on after Michael's done nearly 3,500% return in 6 months. And people are just like so awestruck, and like the godlike figure of Michael Saylor, which he is, to his credit. You got this guy with 3% of the Bitcoin supply under his control. But I was shocked at how few people stuck around to hear this guy who, in a thick French accent, explained how he wakes up in the morning and all he does is figure out how he can accrete value to his shareholders by offering converts and equity in a manner that fits their finance model, which the French are now leading, and accrete value. And they showed a slide where it was like, what was stunning was the amount of Bitcoin per share was up. Like if you buy a share in their company, the Blockchain Group, at the start of the year, you got, let's say it's 0.2 Bitcoin or whatever it is. By this time, you would own 1 Bitcoin sort of thing. Like, so the accretion of Bitcoin per share is just off the charts, which is really interesting. So it really got me thinking, guys. And I'll talk about, I just sold Dry Flash, which we'll talk about separately. The transaction's done. It settles next week, my last ecom business in Australia. But a lot of these decisions are stemming from where is my attention and capital best served? And I think Mark and I are very firmly now in that camp of, we are in a very unique moment in time where we have these treasury companies that are weaponizing the sort of public markets against themselves and are just funneling money out of dead assets like bonds and into Bitcoin. And I think there's some very, very unique opportunities if you know what you're doing and you went deep on this. So there's lots of other stuff I could share from this week, but maybe just open up to your thoughts. Like, what are you guys watching? Are you across what's happening with Bitcoin treasuries? Or Mark, do you have comments that you want to ask? Or James?
My upcoming episode on the pod, I talk about Bitcoin treasury companies. So I might throw it across to Eric and James to ask questions and talk about what they want to know, and then I'll share any thoughts that we can go into detail about.
I want to keep it very. Go ahead.
I was just going to say, just so for the listeners, to why you need to listen to this, in case it hasn't clicked, if you put 100,000 into Blockchain Group in January, you'd have $3.35 million today. That's how important paying attention right now is.
Just a quick little tidbit, Adam. I just sent you guys an image in the chat, and basically that was Semler Scientific, which I mentioned at the end of last week's pod, and I asked you to kind of ask people about Semler. And its price bottomed at like $28 when we did that pod on Tuesday, and in a week it's now up to $42.
And that
was one we mentioned last week, right? And so that's how quick these things are moving. And yeah, let's throw it over to the boys, and then we can go into detail about different topics and parts of it.
I want to keep it. I'll start with being basic, because we're talking about Bitcoin treasury companies like everybody knows what this is. And to be honest with you, few months ago, I didn't know what a Bitcoin treasury company actually was and what it. So if you can explain to the audience, Adam or Mark, what is a Bitcoin treasury company? What do they do? How do they fund? And like things like MetaPlanet, as an example, how does a hotelier company that's, got a dying business now all of a sudden, a Bitcoin treasury company?
Mark, I might hand that to you, and I'll just add one little wrapper on the top there, what Eric mentioned, and this is just a stat. Number one performing company in the US stock market is a Bitcoin treasury company. Number one performing company in the European stock market is Bitcoin treasury company. And number one in Japan, a Bitcoin treasury company. MetaPlanet, Blockchain Group, and Strategy. So success leaves clues. Mark, do you want to have a crack at just explaining what they do?
Yeah, so basically, I'll go back a step, because I think it'll be really good for people who are new to this space to kind of understand the backstory. So back in 2020, when we had the pandemic, what a lot of people suspected since 2008, that every time the US economy or the US would get into trouble, they would print money, was confirmed in 2020, because all of a sudden we had this global shutdown, and a lot of businesses that were operating at that time, really that should have been these zombie companies that had heaps of debt and dying cash flows. That should have been the moment where capitalism did its thing, and those companies were no longer here. And what happened was that the Fed and the US Treasury basically stepped in and bought corporate bonds, right? For the first time ever, they bought corporate bonds, and not just propping up property, not just propping up the Treasury, they propped up businesses. And at that point in 2020, everybody realized, holy shit, there's really not going to be allowed. There's not going to be any creative destruction allowed. Every time the US gets into trouble, they're going to print money. And it was all of a sudden the thing that had been kind of, they, will they, won't they, was done and spoken out loud. There was no illusions. And a gentleman by the name of Michael Saylor, who I'm sure everyone's now heard of, had $500 million in his technology company, MicroStrategy, who was a minor competitor to Microsoft, right? A very minor competitor to Microsoft. And he basically went through the journey. What I find remarkable is we listened to him speak with Jordan Peterson recently, and he explained the journey. And I'm like, listening to this guy who I thought was God, went through the exact same journey that Adam and I basically went through in 2020 and COVID. He was learning the things we were learning in real time at the same time, only he had the company, he had the vehicle that had $500 million in cash, and decided, instead of buying another company, instead of buying back his shares, to basically get that money, instead of buying gold, we had 2,000 year track record, to take it and buy Bitcoin, because he thought Bitcoin was going to be the fastest horse.
He had two assets, Mark. I think I'll just interject there. He had two assets. One was $500 million of cash in his public company. The stock was being ignored because it wasn't a Magnificent Seven and all this new capital.
What was the stock worth, Adam? Do you remember at the time, roughly?
I think the whole market capitalization of the company was, I don't know. It might have been $1 billion.
About $1 billion bucks.
About $1 billion.
So half of his value was in cash.
It was in cash, 50%. And he was getting no thin trading, no coverage, just what they call a zombie company. And then Treasurer Powell came and said, "We're dropping interest rates, and I'm not even thinking about raising them." And so Michael Saylor was sitting there with only two assets. One was this $500 million, which all of a sudden, where in the past he thought, okay, I can maybe get 5% return on that, or $25 million a year in cash flow, interest rates dropped to pretty much zero. So that asset of $500 million just started to melt like an ice cube in his bank account, because he knew inflation would go up and he was getting no return. Therefore, his $500 million would just melt to zero. And the second asset he had was the fact that he was a publicly traded US company. And as a publicly traded US company, you have an enormous amount of access to cheap capital and the ability to print your own money through the form of shares. So you can go to the market and sell shares. If you've got you can put a proposal to the market. You can issue your own paper, like governments issue fiat currency, and public companies issue shares, which are paper in exchange for real value. So he realized that he could leverage that, and he could use the $500 million, and he had controlling power of the business. And so he basically said, I looked around at that moment and thought, I'm either going to die into insignificance, or I'm going to have a swing for the fences and try and convert this $500 million into an asset that's going to go up. And I'm going to use my privileged position as a public company to access capital in the form of debt or convertible notes and these other instruments that, as a publicly traded US company, he had. And so he started to, he announced that he was going to put all of that money into Bitcoin, and then he was going to issue shares and other instruments to get more money and put it into Bitcoin, which is a hard asset. And then it grew from a $1 billion company to a $100 billion company in a few years. And that's when I put my super in. When he announced that, I put all of my superannuation in, and now it's up over 1,500%, my superannuation. Mark,
and then there's a couple of people in the then there's the new debt. Now he's gotten on the main strategy, so to speak, and you can go talk about strike and stride.
Yeah, let's go back a step though, and let's tell the story the long way, right? Because one thing, when he bought Bitcoin at $500 million worth of Bitcoin at roughly 12,000 US Bitcoin, he thought he was late to the party, right? But something happened that I don't think he necessarily thought was going to happen when he decided to buy all of that Bitcoin. And I'll be honest, I completely missed this, right? Credit to you, Adam. You got this one. You took this trade and have taken it all the way to the bank. But when he basically said, this is what I'm going to be doing, all of a sudden there was this massive demand for his stock. And his stock started trading at multiples of his Bitcoin holdings, right? I think it got up to about five times his Bitcoin holdings. And I don't think what he anticipated at the time was that there would be so much demand for his stock because of this. Now, that's because of a couple of things. He's obviously got a larger-than-life personality. He's an amazing salesman, but he's also got steel balls and a level of conviction that was proven during the Bitcoin bear market. So his initial money, after he was selling his stock to buy Bitcoin, then he started taking on debt. So he was basically, people were lending MicroStrategy money, right? And he had to pay it back over a certain time. He had a liquidation price. Those first debt instruments that he took on had a liquidation price of around about 10,000 US for Bitcoin. And in the bear market, it went from 69,000. So he rode it all the way up to from 12,000 to 69, and then down to 15,000. If it had a drop to 10,000, he may have been liquidated, right? So he went through that And then when he came out on the other side of that and the Bitcoin started to run after March 2023, he said, that's it, never again. And he made his balance sheet invincible. He then paid back all the debt that was encumbered, and he would have had to sell if he got margin call. And he started issuing debt that had no covenants, no claim on the Bitcoin. And what really set him off from there was the people who wanted to lend him that money, they weren't Bitcoiners. They were ARB desks. They were hedge funds and ARB desks who could basically lend the money and then make that position neutral by selling options against those positions. So they were just making money on the volatility. And so as Bitcoin started becoming volatile, MicroStrategy started becoming volatile, he started making money. These guys started lending because they could make money on the volatility. And then, James, to your point, from there, he realized, well, how can I make these debt instruments a little bit more accessible to the average punter? And he turned them into those tickers, Stride, Strike, and Strife. And maybe we go into detail on them another day. But basically now, if you buy those tickers on the New York Stock Exchange, he's going to take the money from you buying that stock and he's going to buy a Bitcoin.
So in layman's terms, right, a Bitcoin treasury company, in my eyes, is a company, right, that goes out and buys a shit ton of Bitcoin and uses very attractive debt instruments to do that, which means they could buy a lot more, right? And you can ride the wave of the shareholding, right? Because they then get valued as a company, right, on a balance sheet rather than a single person that owns it. They then issue shares, which you can then buy. So rather than you going to CoinSpot and going, I've got 100 grand, I'm going to buy 100 grand in Bitcoin in my own wallet, you're buying 100 grand in the strategy share with 100 grand of strategy or MetaPlanet shares, and you're riding off the compound growth that company is getting.
Exactly. Yeah, so you're hoping that company will stick to their commitment to increase their Bitcoin per share over time, which will increase the value of your equity. So it's like a leveraged version of Bitcoin.
And I think the thing that you asked, you got the two pros on the left of the screen, you got the two guys that are watching along behind. We've got a private chat, and I've certainly gone down the rabbit hole now, and you're getting educated around it. And the bet here is that, well, Bitcoin's catering at 56% or 60% per annum. Is that which of these companies now are going to, it said Blockchain Group have done 3,000% this year, not 60.
In 6 months.
So you got to go, and then this is when we start to listen to Mark and Adam a bit more and go, well, if I've got, for argument's sake, 100 grand worth of Bitcoin, do I go and borrow some money against it? And then do I have a spread of 3 or 4 of these treasuries against it, like a Blockchain Group, a MetaPlanet, and a MicroStrategy, and then that's my allocation in that sector. So that's my understanding is then how do you lever up your own balance sheet, if you will, with a loan against your Bitcoin at 10 or 12%, they wash out. It was an Australian company called Block Earner or Aladdin. I've got accounts with both, and use some of that without letting go of your current holding. In other words, borrowing against it, just like a mortgage on a house or a line of credit, and placing some money with these treasury companies. So that's the strategy at play.
I think there's a couple of just real baseline things for people listening to this, because a lot of people will go, what's the ticker? 3,000%. I'm doing it, right? Without any foundation. We can talk about that. So I think the first foundation you must have is you must believe in Bitcoin. If you don't believe that Bitcoin is going, if you don't believe, Michael Saylor has a famous meme where he got interviewed on CNBC and somebody said, well, when is it going to come back down in price? And Michael said, it's only going up, Laura, or something like that, right?
It's going up forever, Laura.
It's going up forever, Laura, right? That's what he said, and that became a meme. But fundamentally, you've got to, the simplest way I try to explain it to people is there's roughly, 1,000 trillion, is it trillion? Trillion, 1,000 trillion of assets in the world. Or is it 100 trillion, Mark, or 1,000 trillion?
No, it's about 900 trillion. So yeah,
$900 trillion.
1,000 trillion, I think, would be a quadrillion. Believe it or not, we're getting into quadrillions.
It's just knocking on the door of $1,000 trillion of global assets, and Bitcoin represents 2 trillion of the 1,000 trillion in global assets. So this is the easiest way I try to explain why do I believe in Bitcoin, because all the other value is the biggest chunk outside of Bitcoin is bonds, right? And what's been happening to bonds is bondholders are getting shit returns. Like they're owned by super funds and universities and all this. They've long been considered the safest place, but the returns are shit and actually negative in real terms. And then you got real estate, you got these other huge pools of capital, and then you got this little asset in the top corner, which is Bitcoin, that has outpunched everybody. It is the number one performing asset in the world since it started, bar none. And so the basic premise that I believe in, it's a global asset, it's outperforming everything else, and it's still tiny. And so in essence, what these Bitcoin treasury companies are doing, like MicroStrategy, is a lot of this value that's locked into bonds, for example. They can't buy Bitcoin. But Michael Saylor's realized, I'm a public company. I can manufacture all kinds of instruments that are on-ramps for those investors to get exposure to Bitcoin. The first on-ramp is you can just buy MicroStrategy shares, or you just own equity in MicroStrategy, which is what I did when Michael Saylor first announced. I just bought into the company because I believed, I was a Bitcoin bull. I said, I can see what Michael's going to do here. I didn't foresee all the other mechanisms he was going to create, but I could see what he was going to do and leverage his balance sheet into Bitcoin, which was smart. And it was a way that I could buy it with my super really easily, just through my super share fund. So Michael Saylor and these was the first to go, here's all of these tools that I can use for bondholders. If you want to buy a bond, I can give you the security of a bond. So you can buy it off me. I'll pay you an interest rate with first ranking security. So if MicroStrategy breaks, you'll actually get paid before the equity holders. So the bond market, the bond investors love this because they want to have that first ranking security. They're happy to take a lower return, but then he goes and offers another product that has a higher return, but without the security. And the way he's able to do that is he's giving one guy this much and this guy this much, and he's got it there because he's trading one against the other. So basically what a Bitcoin treasury company does is they're always a public company. They are using all the tools that public companies have to basically get fiat currency and then convert it into hard currency of Bitcoin. And they do it at times where when they do it, it is accretive to the existing shareholders. So, and the way, what I mean accretive is on a Bitcoin per share basis. If you own shares in MicroStrategy, they'll only take debt and they'll only take money from anywhere if they believe strongly that by doing so at that moment in time, at that price, it's going to result in the shareholders, of which Michael Saylor is the largest one, are going to have more Bitcoin per share. And that's how they get measured, is their performance to increase that value. And yeah, so that's, and they're basically using leverage and these instruments that you as a private individual don't have access to because you're not an American publicly listed company. So you get access to all these tools by being a shareholder.
And it's nothing new as well, right? Like if you look at Tesla between 2019 and 2021, when Tesla's stock price was dislocating to the upside and going meme crazy, Elon Musk was basically selling equity at those high prices and taking that capital. He bought 10,000, he bought 20,000 Bitcoin and then sold it. So in 2021, he took capital, bought Bitcoin, and he sold half of it. So I think they've got 10,000 Bitcoin. But he was also taking on capital at high share prices and using that capital to put back into the business, to put back into the bank account of the business, to put back into research and development. So this is not a new thing. That this has always been possible for companies to do. The only problem is that if Ford Motor Company tries to do it, or if even GameStop tried to do it recently, their share price will drop by 20-30%. Because generally, when you take on debt, that's a bad thing. Generally, when you sell stock, that's a bad thing because you're diluting the shareholders. But the market in Tesla's point of view and the market in MicroStrategy's point of view, and now these other Bitcoin treasury companies is saying, whoa, you guys are taking on debt to buy Bitcoin. We see that as valuable. We see that as accretive to us over time. Now, there's a caveat, beware with all of this, right? When Bitcoin, and I believe it inevitably go into a bear market, when Bitcoin does go into a bear market, those companies who have taken on the most debt, so the ones that are most highly leveraged, are probably the ones whose share price is going to get destroyed the most. So it's great for the company because they're acquiring more and more and more Bitcoin. But if you get into one of these Bitcoin treasury companies when its market cap is like 10 or 20 or 30 times its Bitcoin holdings, and then Bitcoin goes into a bear market that next day, you're probably going to lose 90% of your money in that short term, in that short period, right? So you can't just invest in any of these treasury companies for the long term and expect that it's not going to be volatile. At the moment, it's a bit of a gold rush. It's a bit of a land grab for Bitcoin, right? And those who can achieve MicroStrategy escape velocity will probably have, they'll probably be able to weather the bad times. Like MicroStrategy is not going anywhere unless Bitcoin goes to zero, right?
I think,
but some of these other companies, you need to be careful and understand what you're investing in, because I largely think this has replaced alt season, right? This is where the money and the attention is.
100%. I mean, underlying a business like Tesla is like Jeff Bezos in interviews now says, he was basically just raising as much cash from anybody full time for 20 years. And he would take it in debt, convertible notes, bonds, whoever would give it to him, because he was like, Eric, you're a property guy, right? When we talked to our friend Joseph, right? And I asked Joseph, how do you view debt with your real estate? He says, I'll take money from anyone. If a bank gives me money at 7%, I'll take it, because if I can't make 7% in what I'm doing in commercial real estate, I don't deserve to be in the business. I'm not afraid of debt. So underlying, Jeff Bezos just took money from everybody because he said, I've got this machine here called Amazon that has this flywheel, and I just add cash, which creates this, which does that, and then it just keeps growing. The more cash I put in the top, I've got a flywheel to grow it. Now, underpinning treasury companies is the belief that Bitcoin.
Just on that, Adam.
Yeah.
Sorry to interrupt, but just on that is another really important point that you make about Amazon, because Michael Saylor says this in his talks. Since 2008, only 7 companies have been able to use this strategy and grow their market cap. The Mag 7 are the only companies that have been able to do it. All the other companies haven't been able to do it. So every other company is a zombie company, and 7 companies have been able to do it. That is, in essence, why this Bitcoin treasury strategy is now becoming a thing.
Put it simply, right? MicroStrategy's business is Bitcoin. They now have $60 billion of Bitcoin, I believe, right? If its average CAGR is 50%, they're making $30 billion a year. Think about that, right? That's actually the historical last 5 years of Bitcoin. Longer than that, it's actually more. And they're acquiring this asset that's growing at this growth at points. And the risk between these companies, as Mark rightly pointed out, is it comes down to the financial savvy and discipline and rigor and smarts of the team that they assemble around the use of these tools. If you just go out to the market and borrow money at 7%, you're not going to compete with Michael Saylor. Michael Saylor's most recent bond offerings, the big investors, he thought, I'll try one at 0% interest. It filled straight away, right? And then he went, I'm going to try one where they pay me to take their money. And it oversubscribed straight away, right? So why is it that bond investors are prepared to pay Michael Saylor to give them their money?
Because of the uplift, right? Yeah, because of the uplift.
But also his track record. And then there's brand new kids on the block that are doing it differently and offering. Now, MetaPlanet is operating in Japan, and there are certain conditions in Japan and the way the Japanese market works that are giving MetaPlanet a significant advantage, even to strategy in America, because of the way Japanese capital works and the reporting in Japan. And so this is another rabbit hole to go down, but why a lot of smart money has moved into MetaPlanet. And like you said, Eric, they were a small hotel chain, struggling real estate business, and they have grown billions of dollars in value in the last 12 months. Eric Semler spoke at Bitcoin Prague. They're a scientific company in the US, and their share price is starting to go like this because you know what they're doing? They're assembling the team. They just brought Natalie Brunel on. They're bringing in the financial. So when I was in Paris at the Louvre, I hung out with Dylan Leclerc. Dylan Leclerc for a long time he's only like 30 or maybe not even 27, 28. He was like on every podcast. He's a young kid who just understands Bitcoin analytics and the numbers so deeply. He got tapped by MetaPlanet to come and run their treasury, and now he is the one driving. And when I spoke to him in Paris, I said, mate, he said, what are you doing here at Blockchain Week? And I said, I'm trying to understand these shitcoins because I don't understand how they work and how you make money. I said, at the moment, I'm just a Bitcoin maxi. And he looked around over his left shoulder, his right shoulder. He said, I shouldn't say this because we're at a shitcoin conference in Paris and I'm speaking, but you're on the right track. Just own Bitcoin, right? Like that's literally what he said. So basically you got these companies whose underlying business model is we buy this asset that is growing faster than how many businesses do you know that are growing at 50% a year? Imagine MX Store growing at 50% a year.
Yeah, it's ridiculous.
Year on year on year on year.
I've done some calculations, some research while you guys have been talking, just so people kind of understand the percentages of ownership in some of this stuff. So quick chat GPT, I was just interested going, okay, USA, Canada, and Australia, right? What are percentages of the population that actually own certain asset classes? So we can actually see how new Bitcoin still is, right? And how the adoption in our minds is increasing. But these stats surprise me quite a bit. So in USA, right, 58% of the population in the USA own shares. 65% of them own some kind of real estate. 14% own some kind of Bitcoin, not crypto, Bitcoin, right? So you're looking at less than a quarter of the people that actually own shares as a percentage. You look at Canada, 49%. Yeah.
Ask ChatGPT how many people in the world actually own one Bitcoin and watch how you have your mind blown.
Yeah, it's next level, right? Like even if it's just the Canada, USA, but what I found quite interesting is Canada, 49% shares, 66% real estate, which is quite similar to USA, 10% Bitcoin, right? So even lower than the US again. But what I found interesting is Australia, you got 37% in shares, 66% Bitcoin. So quite similar. 66% real estate, which is quite similar, but 20% of people in Australia own Bitcoin. Yeah. So Bitcoin is being adopted in Australia a lot quicker, right, from a percentage basis, than like it's double Canada and 1.5 times USA. What do you guys think that is? Out of curiosity,
I think Australians are quite open into this, especially at the moment. A lot of Aussies are feeling displaced from the real estate side and are starting to feel maybe we have to look at other things. But Eric, everything you just said there is a really important for listeners because a lot of people have a price bias problem with, there's a term for it, but they look at Bitcoin and they go, it's $105,000 US. I've missed that boat. Let me find, the next Bitcoin, right? And what we've just gone through here, just you think people aren't watching what's happening with MicroStrategy and what's happening with the top 3 companies in the 3 big share markets, the European, the Japanese, the US, are all Bitcoin Treasury. Now, 3 years ago, there was only MicroStrategy. Today, there's over 150 MicroStrategies around the world and more coming on stream every single day. Grant Cardone announced yesterday they just bought 1,000 Bitcoin to put on their balance sheet at Cardone Capital, right? So what happens is game theory kicks in. People start to see their results and the performance on a global asset, and now all this money's starting to move in. So what does that mean when you've got a finite asset? It is the only finite global hard asset in the world. So we're starting to see game theory happen and money is moving in. Only 55 public companies in America have more than 50 Bitcoin. Think about that. Only 55 public companies have more than 50. So we are so early in this thing. And these guys coming in now are not retail picking up onesies and twosies. They're picking up hundreds, or like Cardone, 1,000. Even you and thinking about it, putting it on Unemployable's balance sheet, right? Like,
yeah,
so
we have. Now we're accepting it. Yeah. So when you look at what you just mentioned, Mark, now obviously there's a big portion of the population There's about 8.2 million people or whatever it is, billion people,
Billion.
that will never be able to afford, right? There's a lot of, obviously, people in certain countries that are, poverty-stricken countries. But I just use that calculation. There's about 1.5 million people in the world that own at least one Bitcoin. So to put that in perspective, that's 0.018% of the population, not 0.1, 0.018%. So that goes to, like, when I look at Bitcoin, because again, I'm a pro property guy, right? And then I listen to Livingston that you guys sent me about, comparing Bitcoin to property, and he talks in riddles and innuendos, and it's so interesting. He's actually a very clever guy. I don't know how he does it. I don't know what ChatGPT program he's using, but the way he speaks and the words that he uses and the innuendos is on another level. But I understand half of it. I don't understand the other half. But I just, after it, I'm just kind of like, yeah, I probably shouldn't be investing everything into drywall, eh? Those of you guys that don't know, it's Adam Livingston, isn't it?
Adam Livingston.
And he's
Adam
incredible.
Livingston.
Yeah, he's got one hell of a way with words. And even Mark said, he came and said, I'm not too sure what language he's speaking, but you got to play it on. Like most people play stuff on 1.5 speed to get through it. You got to play 1.5 speed to just.
You got to play him on point. I would follow him on X because he makes a little bit more sense on X, on Twitter, X, whatever. But yeah, he's fucking wild. I don't even understand him. But like Eric, it's such an important point that you're raising, and there's such important statistics that you're raising, because if you go back and look after World War II, the same statistics are almost identical. The amount of people held stocks. Nobody held stocks after World War II. Everyone held bonds and real estate, right? And so stocks was the new vehicle. Now technology has gone even further, and Bitcoin is that new vehicle. Like Adam says, that is finite. It depends on what you look up. But like you said, there's only between 800,000 and 1.5 million people in the whole planet who own one whole Bitcoin. I put on my Instagram the other day, and it got a heap of engagement. Aim to own one Bitcoin. If you're just starting out, aim to own one Bitcoin before saving for a deposit for a house. Because when you've got $450 trillion worth of real estate and only 2 trillion, maybe 3 trillion now dollars worth of Bitcoin, well, which one has more room to increase, right? Yeah. And so I think the number one strategy for anyone who doesn't have any assets is to own one Bitcoin before saving a deposit for a house. Not financial advice, but fucking life advice. Like, seriously.
Guys, I know this is an ad, but trust me, you want to watch this one because it is an absolutely ripping product for anybody who uses a computer. One of the things I hate the most in business is email and responding to YouTube comments on my computer here. This AI app is a game changer. What it does is it enables me to never type another email again. I'm going to show you how it works, but essentially, instead of typing, I have a key on my computer that I just push the key, I start talking, it dictates everything I said and uses AI to correct any words that it hears after I've trained it a few times where there's misspelling, and it just cuts my email response time in half and enables me to give much deeper, better emails to people. Just check this out. As soon as you see it, you'll see how it works. If you want to get it, there's a link beneath this video. It is insane. It's called Whisper AI. It's a game changer. Let me show you. So this is a scene you've all seen before, writing an email, but instead of going and writing and using my keys here to type in, I'm just going to push that little FN button and I'm going to read this straight in here. So watch this. Hi there, thanks for watching the podcast. Have a great day. Let it go. Boom, there it is, and I hit send. That's it, guys. Click on the link below the video. Get signed up today. It will save you heaps of time. All my entrepreneurial friends are using it. You can thank me later. Let's get back to the pod.
And this is what Eric and I, property at the moment is the focus. But I put some spreadsheets together. It's like we've got the 2 A graders and the 2 C graders over here when it comes to crypto that learn it's catching up. But I put two spreadsheets here. I alluded to them last week about if you bought a one Bitcoin, borrowed 40% against it and put some into MicroStrategy and then put in a 10-year compound calculator based on half of what the CAGR of a Bitcoin is and half the CAGR of MicroStrategy, dumped it down half. and then put a $4 million property at 9% per annum over the same 10 years. And it's fucking night and day. Like there's not even a comparison. Not saying don't own property. I think a healthy mix of the both is certainly, again, not, I'm doing both.
You're seeing even like the king of it's Grant Cardone. I mean, he's been property. He's seen pick up 1,000 Bitcoin to diversify a little. Eric?
I had a good conversation with Mark last night, right? I rang him. I was at my little one's soccer practice, and we've got this chat, right? That we got multiple chats that we're in, and there's lots of back and forth and a lot of information, and it's fast, right? Bang, bang, bang. And if I don't look at my WhatsApp for 2 hours, there's 40 messages I got to look at. So
a whole university degree has passed you by if you don't check your WhatsApp.
Yeah, that's right. But with Mark, right? I like Mark. His angle that he takes sometimes, because it's kind of like he plays devil's advocate, right? Yeah, he plays devil's advocate sometimes, right? So it's like yes, but then Mark's like, yeah, but remember, guys, this can also happen. Da, 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 da. And I just think back and I look at Adam as an example, right? Like the conviction that he has, which is now rubbing off. His conviction is rubbing off, and so is Mark's on guys like James and I and other people in the group, starting to believe and study this thing. But the key is having the conviction, because we could be sitting here, guys, and this is the reality, and this is what you have to be comfortable with, right? Whether we believe it can happen again or not, is this. Mark me if I'm wrong. Was it 2019 that Bitcoin went down 60% that 1 year? Something along those lines.
The latest crash was 21-22.
Okay, so you got to be okay with that. Right? Because the next year went up by however much, 150% and 100. So there is a lot more volatility in something like this than there is in my opinion, any other asset class, unless you're, investing in your mate's, a penny stock that, is going to go through the roof, which obviously nobody recommends. But you got to be okay with that. You got to sleep at night. And that's where the conviction comes from, right? Like I know Adam, right? And he's mentioned, his Bitcoin holdings to me in the past. And I know that he's rode through those ups and those downs, right? And you got to be okay with being able to sleep at night, right? Being okay to have a discussion with your business partner or a discussion with your life partner, whoever that may be. If you're taking Mark is an example. He's been public about taking some money that his dad has and putting it into Bitcoin and this and that. He's got to be okay to say at some point, if that happens, hey, Dad, just so you know, right, you're down 60%, or you're down 50%, or you're down 40%. And this, I think, is where people need to get educated around, because you got the property people. Property goes up and down a bit. Yeah, okay, we had the GFC, it came down, but not by like. If property prices in the world came down by 60%, we're all fucked, right? Like that's the reality. And in shares, there's volatility, but you look at Bitcoin, and this is why what you said earlier, so true, is we could sit here, and this isn't, financial advice, and we're bantering in regards to what's going to be the next thing that's going to go to the moon, what's going to be the next Treasury business company that will make that 3,500% this year. But you got to have the conviction. And the only way that you'll have the conviction is by doing the education or surrounding yourselves with people like this over and over. And like, we get the benefit of having Adam traveling the world, going to these Bitcoin conferences, talking to the top heads in Bitcoin. Mark my words. I know how Adam is. We will have Michael Saylor on this podcast. I know it's just a matter of time. Right? He probably already has it sorted, not telling any of us, like this, right? This is the thing, right? That is how much conviction this guy has and who he's rubbing shoulders with. And there will always be new technologies that will coming out, and we are benefiting from it because we're in the chats, we're his mate. But right now, you guys all have this information, just like you're in the same chat. This is your chat. This is what you get to listen to. So I appreciate what you're doing, Adam, because it's a lot of work what you're doing. You're traveling, like as fun as it is, right? Traveling and going around and going to these Bitcoin conferences. It's work, it's time, it's money, it's effort, it's energy.
It is. Look, there's two things I want to say, and thanks for saying that, Eric. Before we sort of move on from this, a couple of quick things to round out this before we move on to the next subject. there's two ways to get conviction. One is doing the work through YouTube videos, audio books, and all that. And the second way is to go to events, and there is two good ones in Australia that happen every year. So look up, Bitcoin Conferences Australia and get to them. But I just want to make a point which took a long, long time for me to understand. I saw a reel this week. You talked about volatility, and someone says, "Oh, Bitcoin's going down in price and up in price. How do you deal with the volatility?" And the guy said, "Bitcoin never goes down in price because one Bitcoin's always one Bitcoin." She goes, "No, but it goes down." He goes, "Oh, you mean it goes down compared to fiat, right?" And she goes, "Yeah." And he goes, do you know how to measure the value of fiat on a day-to-day basis?" And she goes, "No." I said, "Well, would you agree that it's worth less 5 years later than it is today?" She goes, "Oh yeah, I guess it is." And he goes, "That's the trick. You can't see how much you're losing through fiat." And that's how they've gotten away with it for so long. When I went to Istanbul airport and tried to buy a chicken sandwich, I realized how volatile fiat is, except it doesn't come back. It only goes down. It was literally $24 for a chicken sandwich at the Istanbul airport, wrapped in a plastic thing. Not like sit down and have it served to you. This is to grab and go. It was 25 Australian dollars. That's volatility. It's just volatility you don't see because dollars are priced in dollars, right? And that takes so long to just get into your head. You're living within the system, and it's hard to get your head out of the system. You are being volatile to the downside every day with fiat.
And that's an important point, Adam. It's like historically over 2,000 years, the release valve for that volatility that the governments hide from their citizens has been gold, right? Because nothing has outperformed gold in that time. And now the release valve has been gold, right? All the central banks are buying gold, but it is also Bitcoin. And that's why you see those memes about a house priced in Bitcoin, that the house was worth 500 Bitcoin. Now the house is worth 250 Bitcoin. Now the house is worth 3 Bitcoin. It's right. Like if you start pricing, instead of pricing Bitcoin in fiat terms, USD, AUD, whatever your currency is, if you start pricing everything around you in Bitcoin terms, you'll realize that the value of everything else is actually going down. Bitcoin doesn't. Forget about the fluctuations in fiat.
Yeah. That term, Mark.
That's the cognitive dissonance that is, it's so hard to grasp, right?
Yeah, well, that's what I say to people. My life gets cheaper every day because I've got so much Bitcoin, right? But for everybody else, it gets more expensive. But that term, the release valve, one of the he was a British guy who runs a fund in Paris, in France. He got on stage and he said, "What you got to understand is these treasury companies to corporate investors, like all the people that are buying at a corporate level, MicroStrategy's, offerings and MetaPlanet's offerings." Right now, it's like somebody's got their fingernail in the valve on the bike in these bond markets and real estate markets, because Aussies only have a real estate market that's boom, 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 boom. There's huge institutional money locked up in high-rise buildings in the US that have been hammered, and US real estate that's hemorrhaging. There's literally trillions of dollars in these with institutional money. And at the moment, since MicroStrategy's come on, they found a way, and it's like a fingernail in the bike valve trying to let a little bit of air out of these overinflated, stuffed markets where all this money's found. But he said, what's happening now is these straws are going into the tire as these treasury companies are figured out how to extract, and they want to be extracted. They want off-ramps out of these assets. And so that's why you're seeing this extraordinary growth. He says, I know I'm not a Bitcoin treasury company. I'm an investor in them through my fund. And he said, I know they sound unsustainable, but if you understand how much cash is trapped in these shit assets, trying to find a way into where there's some growth, even a fraction of that money coming out and growing Bitcoin from a $2 trillion tiny little piece over here. Michael Saylor's argument is if we can get it to, I think it was 15% of all global assets, you're at a $10 million per Bitcoin.
And then what's that do to that shit asset? It's already shit as it is. When the money just gets paused out, I mean, they're worth nothing. Like zip.
Right. And we're seeing it now. We had MicroStrategy, then we had MetaPlanet, and now there's 150 straws sucking capital out of the out of those assets.
And Adam, to your point, right? And I did an episode on this, but to your point, the only way that this can be reversed is if we start decreasing the amount of debt in the system. But guess what? There's only twice in the last 100 years where debt in the system has been allowed to decrease net. Once was in 2008, right? Global financial crisis, and it only decreased by 1%. So you got a $100 loan, $1 was knocked off that debt. That was it. And the other time that debt was allowed to be released from or decreased from the system was 1930 to 1934, the Great Depression. So the two occasions where the Western world tried to decrease the amount of debt in the system led to the worst recession since the worst depression. So that's why nothing stops this train.
Nothing stops this train. And if you want to scare yourself, go to ChatGPT and say, what is the survival rate of a fiat currency? Whether it's French, Turkish lira, whatever, just fiat currencies, any fiat currency in the world, what's the survival rate? It's something like 98% fail. And the ones that haven't failed yet are on their way fast because they all have bought the same lie, which is inflation is needed, and therefore they keep printing and so on. So we have this
go down the rabbit hole for sure, right? Like JP Morgan, the guy who started the biggest bank in the world, said gold is money and everything else is credit, right? Like, and that's the system that we're playing against here. So
I got good value from Mark the other night after our discussion, like I said earlier. And one of the things that's very basic, right? It's a very basic thing to do, but anyone that's listening, I'd highly recommend to do this as well, is sit there, right? Whether you own $100 or $100 million, wherever you are in your wealth creation journey, and start allocating percentages of where you want your wealth to be in, whether that's real estate, whether that's Bitcoin, whether that's shares, whether that's classic cars, whether it's Pokemon cards, whatever, right? Whatever floats your boat, but have an allocation so you can spread the risk and then increase allocation, right? The more educated you become around a certain topic. And if that's real estate and that's your thing, go ahead. If it's Bitcoin and that's your thing, go ahead. But those percentages is very important. And to be honest with you, even myself, I don't even do that. I don't sit there and go, okay, I want 50% of my wealth to be in real estate and 20% of it to be in Bitcoin. And that's something now that you've woken me up, because sometimes we just do what we do. Oh, here's a deal, go do that, right? Without a lot of strategy around it. You're like, oh, I could go make X on this. All right, let's go do it. Without thinking, going, what else can I do? Right?
Do the math,
I would make a guess and throw it in the comments and let me know if I'm wrong. But I would make a guess that 9 out of 10 people who are watching this pod don't even know within $100,000 or within $10,000 don't even know what their net wealth is. They just have no idea to begin with.
Yeah, it's crazy. It's very interesting, and I'll just touch on again, just that movement of capital. And this is why I bet on Bitcoin, is because I bet that more and more people, as they get educated, they might not become Bitcoin maxis and go all in. But there's been a saying in the Bitcoin world for a long time, the only wrong number is 0% allocation. But, like I sold my real estate. I just sold my e-commerce business. My last business in Australia sold. Why did I do that? Yes, because I'm no longer there. That's part of it. But also, now that I'm a non-resident, that income, the shares are owned in, an Australian entity. So I pay tax on the income that comes out of that business. And I look at the return on what I could, like if I have that capital from the sale, what I could get if I spread that across, like, let's say I want to put some money with Tobam in Paris, and I look at their returns, which is in the thousands of percent. And if I go, okay, well, what if it just did half what they've done, right? I'm going to allocate some there, some to real Bitcoin, direct ownership of Bitcoin. I've already got a fairly big exposure there, and I can allocate it, and I can take a view and go, why would I stay with worrying about freight? Because in your head as an entrepreneur, you don't realize the amount of risk you take on, like, trade routes, shipping containers, US dollar currency risk, refunds, OH&S, insurance, blah, 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 blah. Or I can just buy Bitcoin or, some of these funds. And for me, and from a tax point of view now, one of the things somebody said at the event is, what's the biggest, one of the speakers who's coming on the pod, his name's Dominic, and he said, he's an OG from the UK, and he said, hand up in the audience, shout out the answer, what's the biggest purchase you make in your life? And of course, people said, real estate, your house. He said, no, you're wrong. He said, the biggest purchase you make in your life is your government. And he said, you'll spend more on the government that you choose than any other thing that you buy in your life. And so when you have made the choice I've made, which is to choose a government that respects my freedom of my money, I look at everything through the tax effective side as well, right? So I now go, well, what's the tax implications of me trading this money or investing this money versus taking it as taxable dividends in Australia? So it's really very, very interesting. That same guy, just a fun story, he was signing books at the back. He's written books about Bitcoin for 10 years. And the guy in front of me at the line, he was an old guy, and they were laughing. And I said, what were you guys like laughing? He says, that guy there, he said, 8 years ago, he paid me 6 Bitcoin for one of my first books.
Sounded great.
That's a $600,000 US book.
Oh,
and I said, holy shit. I said, you're still laughing with the guy? He said, don't worry, he's got plenty. He's been around for a long, long time. But yeah, anyway, Dominic was the guy that said that, and it got me thinking. And when you start to really do the math and you start to realize, and this was one of the things at the event that I loved, and I'm bringing some of these people onto our Freedom Summit. If you guys haven't got your tickets yet, by the way, just while we're on that, $100,000, we are that close to raising $100,000 for the John Forcer Foundation. But go to unemployable.com.au/freedom, unemployable.com/freedom, .com.au/freedom. That event, we're going to be diving into this stuff over 3 nights, and it's a $500 donation to JFF, and you can come. But I collected some speakers there, and like there's some fascinating stuff. Like there was a company there called Prospera who've taken a 150-year lease with the Honduras government and created a special economic zone, which is basically almost tax-free. You can spend 1 day a year there and get residency, and there's all these like freedom movements happening around now, like Paraguay and Uruguay. They're offering unbelievable residency packages. There's more to it, and that's why we're doing the Freedom Summit, but that are helping people, choose the domicile that is going to enable them to have the most freedom. And that's why now when I look at these things, I go, if you can get your tax situation right and you can access these things, this is what's happening. The world's looking through the lens of Instagram. They're going, why am I being here? Why am I staying in tax to death? Eric, you were talking about the new trust tax distributions that our Labor government's bringing in. During the week, I put in that thing about how there's the ruling that if you move your Bitcoin to a lender and then borrow money against it, it's a taxable event, even though you're just putting it on security. You're not selling it. You're providing it as security. They're saying that that's a taxable event. So if you bought the Bitcoin for $10,000 and then you want to lend against it and you move it to a Bitcoin lender, and it's now $100,000 when you move it, even though you're not selling it, you're just providing it for security, $80,000 tax event according to the ATO. So there's all sorts of stuff going on that's motivating people to look at what's possible for them, and they're getting to the point where the ATO is going to be paying for it, because people are going to go, well, for what I'm going to pay you guys, I could be living on the beach in Honduras, traveling around, and you'll cover my airfares, my accommodation, and what I'll save in tax.
Yeah, like it's the Western world, it's happening in Canada, obviously Australia. They're every little tax loophole, like you mentioned it right now. They from July 1st, right? It's not like they're talking about it from July 1st, right? Government set to introduce 30% minimum tax on distributions from trust. Now, for those of you guys that don't know what a trust is, right? A trust is a vehicle that has ownership in assets, companies, these types of things. The issue is with a trust, you can't hold money in trust. You have to distribute it. It's not like a company where you can hold, retain earnings and the rest of it. You have to literally suck it out of the trust. And what happens is you have adult recipients. I'm not at that stage yet, but when my kids turn 18 years old, you can then go, all right, I've got a lot of money in this trust. I'm going to distribute it to myself. I'm going to distribute it to my wife. I'm going to distribute it to my kids. And kids that are 18 years old usually aren't earning a lot of money. So their tax threshold is quite minimal. So when you're 18-year-old and you go, okay, Mr. and Mrs. 18-year-old, I'm going to, give you X percent of the funds out of this trust for a tax benefit. And I'm only going to be paying 18% tax on that money as an example. Well, now it's a flat minimum 30%. So that one,
just Eric, but that's a
When's
great
that
point.
come in?
July 1st.
What's the point? It's like you might as well have a fucking company. It's less.
So for guys listening to this, what Eric's saying is, in the past, let's say Eric gets a dividend check for $100,000 from MX Store. In the past, because he's already probably at the highest tax threshold personally because of all the other stuff he's doing, what you would do is you'd have all these kids in your family trust. You'd have what they call a discretionary trust or a family trust, meaning you have the discretion to distribute that profit across whoever's got the lowest tax burden, allocate it there, and it means that the overall tax burden is reduced. What Eric's saying is that they're cutting that out, so the minimum, or you distribute to somebody who's got tax losses in your family, so that you can distribute the income to them, and then it just uses up losses. They're closing that loophole and just saying no, 30% flat, which is just disincentivizing again.
Wow,
Go ahead.
That's just cost me hundreds and hundreds of thousands more dollars. Like I've no, we keep talking about this, right? There was the super, now it's this one, and then it's going to be next one. The more and more of these that come out, the more and more I get closer to packing up and leaving this country as well, right?
Well, I was on the phone with a good mate of mine. Sorry, James. Over the weekend that lives in Dubai, right? He's lived there now for a few years, and I was researching for about 2 hours back and forth on ChatGPT and documenting things and ringing him on the phone and going, what's it like there? Like on the ground, what are you doing? What's it costing you to live? He's breaking everything down for me, right? Like, this is what it costs for your kids to go to a good collegiate, school. This is what it costs for living. This is what it costs to rent in this area, in that area. And then we were just going through the cost savings just in the tax, right? And then when you start looking at that, it's hard not to think more about it, right? And I'm like trying to rile up some troops, right? Like I got Chris now, my ex-business partner that we sold out of GCRP. He's like, when we going? So I was like, hey, I want to try and go in October, November, depending on when the house is done. I've already told Adam, he wants to meet us there. And he's already booked. So he sends me, he's like, hey, just so you know, I've booked. I'm going from October to November. I'm going to spend a week in Europe and then, spend a few weeks researching in Dubai. Like these things are actually happening, right? And my friend that's there now, multiple of his friends and multiple of his 2 ICs and strategic team members now live there as well.
Eric, I get probably 5 a day into my Instagram now from people from Australia saying, can you connect me with your immigration attorney or whatever? Questions.
I mean, Mark,
James?
just back to what Mark, this was on this, when Mark had the different view about that 15% unrealized capital gains tax. Mark just said it's going to happen one way or another. You did point blank, and there was, raised some comments. And you're right, it's just fucking happened now. Block earner, you put your money in there, you can get taxed. 30% distribution tax on trust. And it's that old, an analogy of the frog in the pot, it boils until it's fucking cooked. Well, this is now on Inferno. It's just not just warming up. This is nuts.
People don't understand that the biggest inflation is tax, right? That is the biggest inflation is tax, right? More than your cost of bread, more than your coffee, more than house prices, it's tax, right? But the government, put that
one in the basket, Mark.
Right, the governments are able, and they'll claim, well, that's the price that you have to pay to live in the lucky country or to live in a country like Australia. And Dom and I have this conversation all the time. She says, we're at the point in our life when maybe that's just the price to pay living in Australia. It's like, yeah, but as the situation changes, that price becomes more and more unsustainable to be able to pay.
Yeah, I think people got to think about this too, is strategy and where you are in your life, right? Whether it's Dubai, whether it's Cyprus, whatever tax, Andorra, all these tax efficient countries. If you're an entrepreneur and you can go out there and earn money and make money and create wealth and manufacture equity, right? If you had a strategy, like I look back and I thought to myself, I'm like, imagine if we made the move 10 years ago, right? And said, okay, we're just going to put our head down. We're going to go hard for 10 years. We're going hard for 10 years wherever we're living. It doesn't matter, right? You can go, imagine the savings if someone goes, you know what? I want to live in Australia, like Raf, right? He's like, I'm going to be here 5 to 10 years. And then I know I'm going to go back with a friend of ours that's moved there. And I'm going to go back to Australia to take care of my elderly parents at that time. Like what that guy's going to do in 10 years, he'll never have to work a day again in his life when he gets here. That's the difference. You can work 10 years and make up for 50, if you're doing the right thing. That's how much of that compound growth that you can get. And then I started thinking to myself, I'm like, man, it's
not just the tax though, Eric. It's not even just the tax. It's the opportunity density as well.
It is the opportunity density.
Put 50K a year into a compound calculator over 10 years, CAGRing at 30%, and see, how much better off you'd be in 10 years. And then like maybe that's the decision I need to make with Dom as well. Hey, let's go now, because we're in our peak spending and peak earning years, right? I'm 41, and I've seen what Adam did between 40 and 50. It's like, these are the years where I'm going to be in my peak earning, peak spending. Maybe it makes more sense to go now and then come back at 50 when, you don't have to pay tax on the money that you've already made necessarily.
This will be good for you, Mark, right? I asked him, right? Like this is our chat that I have open right now. And I said, what don't you like about it other than it's hot as shit in the summer, right? He goes, we leave in the summer, right? So their summer aligns with the European summer. So when they get their heat wave, right, of summer, it's European summer, it's American summer, it's Canadian summer. So you have options. He goes, people lift you up. Things are easy and open. Tons of restaurants, beach clubs, social life if you want it. Safest place on earth. Plenty of help for cheap cost. Best schools I've ever seen. And this is a guy that his earning is on another level again, right?
Yeah.
On what he's doing over there. And he's a very savvy guy, right? So it's interesting, it's very, very interesting.
It's not just a buy for the average Aussie listening. There's a lot of average Aussies. A lot of average Aussies are moving to Malaysia or Philippines, or I was talking to Perry, and Perry's just moved from South Korea to Thailand, and he's just making these decisions based on, I just wanted to be able to create a low time preference in my life so I can build my business without the stress. He's just got a new apartment in Bangkok. He's got a 3-bedroom, beautiful apartment, 180 square meters, and it's like $2,000 a month, with full facilities and gyms and everything like that. And he's just like, I'm able to run Unemployable with you guys and do what I'm doing on a salary sacrifice basis for equity, because I've got a low time preference now, and I love what I'm doing. I love,
that's important. You talk about like the lady that's coming on the Freedom Summit. She sells. I mean, you think of someone like that, like Thailand, it's 2 hours difference. You can actually, if you get a remote work role, then you can still work and sell into Australia.
Totally.
With 2 hours behind. I mean,
totally.
For $2,000 a month, you're living in a palace. $2,000 a month, you're living in a fucking caravan at best.
No, that's right. That's right. I want to share a quick story before we finish this one up, guys. Mark, I really wanted to jump into the GPT stuff, but I want to make that a long conversation. So we'll do that next week, because Mark's had some really interesting stuff with GPT. I'll just close off by just sharing something, which sort of 2 stories molded into one. One, obviously, I sold Dry Flush this week, and one of the reasons I was able to sell it is because I'm fastidious when it comes to my books. I know exactly where everything is at. When I sold my animation company, the people in Los Angeles, the buyers were like, we've looked at so many businesses. This was the first one where every fucking line item was accounted for and understood and known. And we had massive degree of comfort in buying this from you, because we believe that number is the number. And the same thing happened with this sale. The buyer sat down with me, and I went through line by line by line, completely transparently with a Xero file, and said, that's what it is. This is what I want as a multiple of earnings, not negotiable. And they went, deal, done. On the flip side of that, I had a client ring me this week, and they said to me, they're having some challenges in their business. And I said, so look, what does the Xero file say? Like, where is all your money going? Because they weren't sure of how much, they got this top line revenue coming in really strong, but they didn't understand what was happening beyond that. And they go, and they were sort of evasive. And I'm like, you get a Xero file, right? Like and then I said, you do know that what software your company uses to do your books. This person was a director of the company and did not know what accounting software There's 3 directors.
Hmm.
What accounting software they use. I said, when was the last time you looked at your P&L? And they were like, I don't get financial reports. I don't know. And I was like, holy shit, you're running a business, multi-million-dollar business. You're a director and you don't even know. I said, please tell me you know whether you've got 0 or not. And they went, Adam, I'm ashamed to say that I don't. I said, this is your problem. I said, right now, write to your accountant and tell the other 2 directors you need financial reports weekly. Book a call with me and I'll go with you inside of your Xero account. And I said, in 2 hours, I can turn you into somebody who has never had to have this conversation again. I said, we have to turn you from a salesperson into a business person, and you are never going to get the financial results you want while you don't have that. And that was why I was able to sell, really quickly, without negotiation, for full asking, and a really transparent way, because it was not a guess. It was just clear, And so just again, it's a reminder.
Same thing with us at GCRP, right? Like we got bought out by a private equity company. Like, the due diligence those guys do, like top level forensic accounting. And it's because the books were clean as, and they said the same thing. They've never seen a company that the books were that clean. And
premium, right? You got a premium for it.
You do get a premium for it. And the thing is, a lot of people treat their companies like personally, they have everything dumped in there. Like, you got to really think about what you want out of a company when you start it. Is this a company that you want to build to then go and sell, right? Or is this a company that you're just going to have and you're going to run every expense that you can, and kids, items and this and that, and just wash everything through it, and cars and fuel and, all these expenses, and make the books really look like shit, right? Because that is another angle and another strategy. But let me tell you, no one's going to be knocking on the door. And when they do, and if you show them anything like that, right, you ain't going to get no premium. And most of the time, you're not going to be able to sell the thing. This is going to take you quite some time to then actually go and sell it, right? Like when you talk to big firms like KPMG, right, and these types of firms, they literally hold your hand for a few years, a couple of years, to prep you for sale, right? And there's so many things that you need to do when it's a big sale, right? But at the end of the day, it depends on what people want. But yeah, I agree with you. Is you need to, but I'm not good with numbers. But numbers aren't my thing.
Right? How many times I get told that? Oh my
God! But numbers aren't my thing. Oh, my business partner handles all the numbers. Oh man, that's very, very, very dangerous talk. That is.
Yeah. So it feels good. I mean, I started that business for a couple of $100,000. I got all the capital back in a short time, and it was a great journey for me. But the humble little toilet business is now sold. The new owners are excited, are competent, and good people. So they're going to take it on to the next level, and I'm going to just hang out with Mark as an investor.
Well, you actually got 2 bites of the cherry. You sold a jurisdiction off, and then you sold Australia as well. So that was a double dip. So well done.
Yeah, I got the rights to Australia, New Zealand, sold off New Zealand, and then sold off Australia. So I got paid twice. So it was good. But guys, I just can't encourage you you've got to do the work. And what Eric said there, don't ever be that person who said, I'm just not good with numbers. Well, just stop watching podcasts, go get a job, be broke. Like seriously. Or just get a job and buy Bitcoin and wait. But you're not going to be an entrepreneur if you keep saying that. And I was never super at any of that. All you need to know is plus, minus, multiplication. You've got a calculator. That's it. And be humble enough to ask the dumb question. And I said to this person, how would you feel? How much more powerful would you feel as a business operator if you had that superpower where you were one of those people that could look at a Xero file and in like 5 minutes you could tell with any business, not just your business, you could sit down and drill into any business, and in 5 or 10 minutes you could have your head around any business, no matter how big or small, and understand whether that's a good business or not. And this person said, oh my God, I would feel incredible. I said, all right, do these steps and we'll get you there fast. And all it is, they're getting coaching from me, but if they weren't getting coaching from me, they could do it on YouTube or ChatGPT. Like, it's so available, this level of knowledge. So, and it results in exits, and it results in those big paydays. Eric's had a big one recently. I've had this one, which relative is probably not as big, but it's still a good payday.
And it results in clarity. Like, imagine driving through a blizzard with no windshield wipers, going to a destination with no nav. Like that is how most businesses are being run at the moment. It is incredible to me.
Yeah.
Once you have the clarity of where the money's coming in, where the money's going out, and you can make the strategic decisions, right? And I know, Mark, you've been doing a lot of that in your business, and like the clarity that you will get is incredible,
Yeah, it's not that hard. It's just people just put it in the too hard basket. Guys, I think that's it for the week, unless anybody else wants to drop anything in there. The last reminder, guys, the event coming up, it's available, the tickets at unemployable.com.au/freedom. I got some amazing speakers. I've got people coming in from all these interesting tax jurisdictions. We've got Brooke coming in. We've got Raf coming in, showcasing a lady in her 40s from Brisbane who is now doing over $1 million a month in sales off a drop shipping business with no inventory on TikTok and not putting her face on it. And he's got another guy coming in for us that is a performance marketer. So no social media following, just makes really clever short form videos that showcase other people's products and makes a fortune doing it without having to have any of the headache. I've got a young lady from Dubai coming in to talk about Dubai real estate. She's from New Zealand. She's moved over there and is crushing it, helps people get golden visas and all that. Mark, you got a question?
Yeah, I got a question. What do you want me to talk about at this event? I've got no bloody idea. You just
hang
told
on.
me that
Mark's coming too, by the way. You put him on the docket.
Come on, you know what you're talking about. Now,
what am I talking about? I could go anywhere. What do you guys?
We want to look at your dad trades. We want to really understand how you're trading your dad's money and why you're doing it. I want people just to get an insight into, because I think of all the trading you could do, that's the one that you don't want to fuck up the most, because it's your dad's retirement money. So I'd love for the average punter.
I got both. I got mum and dad's now that I'm trading, so I'll go through both portfolios.
Yeah, and we got Ben coming in as well, who's going to share his $1 million week and a whole bunch of other stuff, and he's hilarious. Eric, sorry, $1 million day, not $1 million week. You made $1 million in a day. Yeah.
I'm running an event. It's called the Non-Freedom event. And if you want to know how to hire a lot of employees and pay payroll tax and property taxes and land tax and opening up your PO box, and there's just bills all the time, if you want to learn about all of this, I've got the Non-Freedom.
It's not called the mailbox.
Okay.
It's called the suicide box these days,
right.
Isn't it?
The Non-Freedom. I got the Non-Freedom where like my garage is full of furniture right now for the new property that we're building. It's very Non-Freedom. Whereas you've got Adam here with 3 suitcases and all the money in the world, right? That is more free than fucking the birds that I see in Broadbeach.
Which birds? Their own. They ain't free, Eric.
Which event do you want to go to?
Eric, you remind me of my bear joke. It's like, you're not here for the hunting, are you, brother? Oh man, I'd let you off if you just let yourself get fucked once, but you just seem to keep going back, and I'm just starting to have my doubts about you, brother.
And I'm still smiling. Fuck me. Oh, that's good, guys. That's awesome.
With that said, guys, if you want to sign up for Eric's butt fucking conference, go to unemployable.com.au.
Sponsored by the ATO.
Sponsored by the ATO and the Victorian government.
As you enter, you get a free barrel on the way in.
It's sponsored by the ATO and KY. Ansel
that's the VIP section. If you get the VIP, you get the KY. Most Aussies don't get that. They get the bucket of sand.
All they get is a pillow so they can bite.
All right.
All right. We might have to cut this out.
No,
leave it in.
To fund the ABC, give us a like and a subscribe. See you next week.
No, actually, in all seriousness, please do subscribe, guys, because it helps us. We got some cracking guests coming up soon too, right? Like some of the people, we've got a guy coming on soon who's rung us basically, said, want to come on the pod. He's one of Australia's wealthiest guys, $500 million, wants to come on and talk about the shit show that's happening. He's just pissed off and frustrated. Many people will know this guy's been on the rich list for a long time. We've had some pretty serious hitters. I've got, we can't announce it yet until we've got the date locked, but we've got a huge international guest coming in, which is going to be exciting. And that's certainly going to rustle some feathers with who this particular person
Yes.
he is. Fucking controversial, this dude. So you know, all the softies, you better get ready, because you're gonna need to have a cup of concrete with this guy's point of view.
You know what? Even today's podcast that we recorded, like, unbelievable. You know, it's a husband and wife couple. They've done 20 rental flips, 2 subdivisions, 2 new builds, all while sleeping in swags, sleeping in dongas, sleeping in caravans. They now sleep in a little houseboat, and they're doing all this stuff. And I'm just like, just so many different stories and so many different angles on how to make money. It's incredible.
For the ATO.
On that note,
money for the ATO.
On that note,
on that note, guys, jokes aside, good to see you all. Thanks for being here, and for everybody watching the show online, thanks for watching, listening, wherever you are. Hopefully it's adding value to your life and journey. We do this because we want you to be financially free and free of mind, free of spirit. So, yeah. Eric.
Financially free. I'm just like, get off your horse, man. He's tired now. Come on, let's go.
I'm on autopilot at this point. All right, guys, thanks. Fuck off. See you next week. Bye for now.
Hey there. I hope you enjoyed that episode of Unemployable. If you'd like to watch another episode, just click there.